morning. Good morning. It's 8:20 a.m. September 12th. Let me just get this started. Hope everybody had a good weekend. And let's go into the daily charts really quickly. We have contract rollover happening in futures, so volume's kind of weird on Friday because half the contract volume was going to this contract and the next one for the next contract. So we're still transitioning over to the new contract. I've rolled over, so some of my numbers in the futures will be different. Just giving everybody a heads up about that. And let's talk about some SPY here. So we're having definitely a bear market rally here. And we went right up to this trend line here and a key level of 405.84 that I mentioned previous. And markets definitely short covering. Um, these bear market rallies are something to behold. So that's, we gapped and then we held on the SPY and came up to this trend line, broke this level a little bit, and now we're gapping up again, from 6 p.m. on Sunday night. So maybe anticipation of the CPI number being lower again for tomorrow. Let's look at the Qs. If you hear some TV in the background, that's my daughter. She's sick, so hopefully it's not too loud. Let's look at the Qs. Yeah. All right. Good job. All right. So what do we got here in the Qs? Let's look at the levels, right? So in the Qs came right to this trend line, found resistance, and right to this 307.22 level I pointed out on Friday. So that did act as resistance. Also the 50 moving average. Obviously we're in Nasdaq as well. We're gapping up. So we're about at 308 right now. But these levels are pretty spot on for Friday. So that's the Qs. Obviously, we have pretty nice buying here. Also closed above the 50-day moving average. So very very interesting in both of these right now. Let's see the TNX. I don't even think TN. Oh yeah, TNX. Let's look at our 10-year yield. All right, 10-year yield's kind of balancing here. After I'm done with this, okay? Okay. So we're kind of balancing in the TNX. And today we're down 1.54%. And right now we're trading at 3.27, the yield, the interest rate, 3.27 in the 10-year. So holding the higher levels, but we're balancing, right? So what happens from balance is we're going to move the one way or the other, right? Probably the CPI number will affect this as well. So let's get into the futures. I'm going to go over something. I'm going to go over something to show you guys another thing I look at, another tool I look at in a little bit. And I don't want to take too much time. All right, let's go over those futures. All right. So, okay. Well, look at the market now, huh? So right now we're currently 40.98 in this contract. Um, we were gapping. We still are, but this is the highs from Friday right here. Prices right here. So we're right in the middle of the session of the overnight. Okay. So maybe who knows? Maybe we go back into range by the open. I don't know yet, right? So this is some excess now from overnight. So people are taking some profits from the overnight. So obviously, what happened? We were gapping higher in the overnight on Friday. We made a high overnight highs here, and then as the market came closer to the open, we kind of pulled back to almost the mid of the overnight, and then we opened right here and maybe popped down for a second, and then we just shot up. We shot up, and for the rest of the session, we just held up here, right? So, and then of course we're gapping higher. So that's kind of what happened. And in this particular overnight session, we're right. This is the 50%, the mid of the overnight. So we're right in the middle of it. So we're right in the middle of this range. So it's a very balanced range. Okay. You got buyers and sellers on each side. Okay. Now, the one thing I'm going to look at here is we have a news catalyst coming out tomorrow. So, a lot can happen for tomorrow. Okay. A lot can happen. And anticipated that the CPI will be lower again. So that's bullish. Okay. Obviously, if it's hotter, that's bearish. I don't think anybody's expecting it to be hotter, especially with crude hit like a low. Even though it's getting caught a bit today, but it definitely is low. So crude's at what are we at? $87 a barrel, 87.39. So that's been low for the whole month. So that should be energy should be definitely lower in the inflation number. So what I'm looking about here, though, you guys know I talk about the volume profile and the composite, right? So this is the composite right now, right? That's what we're looking at. Now you always know what I'm talking about is value, and this is obviously volume, but value is 70% of the trade, right? So right now value is here, value area high here, and value area low is down here. Okay, so we're above value right now. We're above value. Okay, and here there's not a lot of volume here. So what that means is this is very weak foundation here. That's a very weak foundation. There's not a lot of two-way trade here. Okay, what that means is this is basically on one leg. This move higher. So if price was to come back down and test these prices, we could fall back here. Now we have a news catalyst tomorrow. Which I think is being priced in with this move higher. So this is very interesting. So, if we do move lower, we could go back here. Not a good foundation. Of course, we could always, hold these levels, build value out here, and maybe move value up here. That would be bullish. But just keep in mind that this is not holding on by much here, and we could see ourselves back here. That's just not what I'm calling for, just what has to happen. So basically we need more volume up here and to bring value higher. That would be bullish. If we can't do that, we're going to return back here. So I think I made myself clear about that now. So that's what I'm seeing now. Okay. All right. So let's look at the Qs. It's going to be a similar story. Okay. Same kind of story. I'm not going to rehash it too much. In the Qs, it looks like we're a little weaker and we're almost at the highs. Okay. We're almost at the highs. So not as paltry as volume, but you can see It's a little different. You can see the volume here. You get real thin and then puff out here, right? So same story. Not a lot of good foundation. We could fall, okay? But now we're kind of balancing again in the overnight when we're in the middle of the session. So that's not really indicative. Like it doesn't give you a strong read. It could almost lead to balance because of tomorrow's news. Okay, so we already made a gap higher, but now we're kind of holding the highs, and we could do this today, because of the news tomorrow. And this move might have just happened overnight, and now we're going to balance it off. We have to see, right? So let's look at a couple key levels, and then let me just bring up the 60-minute futures chart really quickly. All right, let's go over to that. Alrighty. So what am I seeing in the overnight? So obviously now you can see some selling coming in, right? But you could just see this move, short covering. Then we had the volatility here where the bulls had their last shot, and then more short covering. And now we're here, right? And we broke a lot of key levels here. So for today, I think we might be looking at like a little bit of a rest day before tomorrow. However, you can see we got key levels, right? Let's talk about that really quickly. And we got support here at 40, 80, 25 right here. So this is really breaks. I'm not calling for bear, but the 40, 80 on the futures, if this breaks here, we can come back to this, hit this trend line here and the demand zone here. Okay, that's a level that's been tested a bunch, and if it's tested again and we move, there's not much support here. That's one thing I'm looking at. Now, as far as moving higher today, I mean, we've moved a bunch. It's no telling that we can't move again, and we don't have much resistance above. So a reason why I zoomed this chart out a little bit today is this is the most, I've talked about this for a while. Now look where we're going towards again. This used to be 41.22 with the contract rollover. It's 41.39. Most traded price of the year, most traded price of the for the last year. So from 2021 of the September to now, it's the most traded price, and it's also the most traded price of this year, which is a very pivotal level. Okay, so you can see here this is from the last Powell when he spoke and said there'd be pain here. This is that move down, which didn't have two-way trading. It was kind of just a straight drop, which isn't going to give much resistance. Okay, if we visit it, there's not much resistance there to this level. So today, or tomorrow, if a good reading comes out, look for this level 41.39 in the futures to get tagged and probably stop the market. I might just hold here, but that's just a key level to look at. Very key, 41.39. That's not usually a level that just gets ripped through, except if it's news, like this news, right? That's a news catalyst. So maybe if it's just really under the inflation number, maybe we could cut through it and go to the supply, but I'm not sure. I'm just saying that this is just a key level to look at. It's kind of the bull bear line for the market, 41.39. Okay, for the futures. Okay. Other key level, support level is 40.28 in the futures too. Okay. Like I said, I don't see a lot happening today, but this market's nuts, so we have to see, right? So let's look at the Qs. So in the Qs, you can see the same kind of thing. Okay, I'm not going to go into too much, but to give you the levels. So key support level, just like in the ES, this is 126.49.50 right here. That breaks, we could go down to this demand zone and hit 124.84, which is key support level. Same thing like I talked about in the ES, okay, the futures, is that this move down doesn't have much resistance if we go higher. So if we do get some great news, we could come up and pop up here to about 13,000. We have to see though, right? So the only other thing I can see, and you can see it in both the ES and the NQ, is a little bit of a head and shoulders former, possibly forming. Okay, so you'd have a shoulder, a head, and if we come down to here again, make a shoulder, and if we can revisit this level, then like I said, I'm not really calling for that because I don't know what would be bearish today because we're waiting for tomorrow. But that's a possibility of a pattern forming to make us go lower. Possible. Okay, possible. Other key to note is the trend lines that this is futures market, this is 24 hours, but you can see here there's a trend line here that we broke in the NQ and the ES. So a trend line from these highs from broken. Just a note, that's notable. Okay. All right. Let's go over to the zoomed in chart. Maybe I can look at some possible scenarios today. Like I said, tomorrow's a big news release, so I wouldn't be calling for too much confidence of like what market could do, but I can give you what the market could do, right? So let me bring that up. All right, so let's just go into some scenarios here. We're still gapping higher, okay? Got a balanced session. I say this is kind of looking like a balancing day to wait for tomorrow. So a couple key things that I think could happen here, okay? And it's going to tell us a lot of information. So we could open up, push up, come down here, hit the overnight lows, bounce up from the overnight lows, come down to the most traded price, 40.69.50 on Friday, and these single prints really tell the tale. So we could hit these single prints and bounce up and balance, or we can clean the single prints, and then I think we probably found support here and balance. Okay, so that's one scenario. Now if we go for another scenario, that's the most likely scenario I see, waiting for tomorrow. That's the most likely. You know, you could also push up higher. Again, overnight lows, come back down here, and in a bearish scenario, we could balance here, come down, clean those singles, come up, and then fill the gap and bounce. We could also do that. We could also do that. And finally, I don't really anything like I said, anything can happen in this market, so I don't put anything past anything. So I also think we can come down, maybe go to the overnight lows, find buyers, and we start to move higher, and we can maybe go, you know, a little higher and balance out waiting for tomorrow. So it's really a day of contracts rolling over. We got a news catalyst coming in tomorrow. Most likely, the move has been baked in with this, you know, this short cover rally, this bear market rally. But You know, who knows with this market? Who knows? If the number's soft, that's going to be bullish. I don't see that being anything but bullish. I don't know how high we move, you know. But in the Nasdaq, I don't see any difference. I'm not going to go into depth about a bunch of stuff, but the key basically is this. Both of these guys have the single prints here. Okay? They both have those, which is emotional buying at this point. And we just have to see if we do go, how far do we go into the single prints? Can we fill the gap? This is the gap, right? If we can't, and let's just say anywhere here, we don't go down into the here, fill the gap, we don't clean the singles, and we just kind of bounce up and move here, that's bullish. So that's what we got to look for. That's bullish. We've come a long ways from the lows, from the swing lows. We come a long way. So if it's defended, these areas that are defended, and we balance up here, that's bullish, waiting for tomorrow. Big move happened today. I don't know. I don't see that in the cards, but hey, market could do whatever it wants. Market could do whatever it wants. Let me see how we're doing on time. 21 minutes. Okay. Really quickly, I want to go into something, and hopefully it doesn't confuse too many people. And it's just something I really like to look at. Okay. Give me 1 sec while I pull it up. All right. Let me pull it up. Okay. So I'm going to give credit to Josh Schuler from Trade with Profile, introducing me to the VIX curve. Okay. And I just want to leave you guys with this. I don't want to go too in depth, but it's pretty easy to see. Okay. So VIX curve, okay, really quickly lets me know where hedging is from market makers and dealers. Okay. And how much hedging there is in the market. Yes, the VIX measures, the regular VIX measures 30 months of volatility. That's what the regular VIX, the VIX measures, right? But there's other VIX lengths, okay? So basically, in this VIX curve, we've got the SPY above us, okay? And down here, you can see I have these levels plotted, okay? And the VIX curve, I have two things plotted. The light blue line is the 9-day VIX versus the 30-day VIX. Okay? That's basically like a pair. And when this level is over 1, that means that the 9-day VIX is more expensive than the VIX of 30 days out. Okay? That's a little bit of an inversion, because a 9-day VIX should never be more expensive than a 30-day VIX. That's just how options work, right? You pay for time. You buy a put now versus a put from a year from now. Your put from a year from now should be more expensive, right? But if this flips and it's called inverted, that's telling you that the market is in fear. Okay? That's the blue line. If we talk about the red line is the 9-day VIX versus the year VIX. So this red is the 9-day versus the year out, right? So if that number gets positive, that is super fear. Okay? So basically, when those numbers get super positive, that's the near term is the blue, and the long term VIX is the red. But when the red supersedes the blue, and you can see this here, I just want to point this out. This is the COVID low right here. So this meant that the 9-day VIX was more expensive than the year VIX. That means the options for 9 days out were more expensive than a year out. Okay, which inverted this and made this red line go above the blue line, and that usually is an ultimate fear indicator. So you can see here, this is the COVID low of the SPY. So that tells you there's full fear. Now, when there's full fear, this can last for a while. It doesn't mean you just automatically go long, but it's telling you we're at max fear. And eventually what's going to happen is when this is called an inversion, okay? But when it reverts, you can see what happens. The market goes up. Okay? Now, really quickly, I want to explain why that happens. Okay? When people are buying puts, okay? When people are buying puts, and let's say I buy a put, okay? And I buy a put, and what happens is the other side of that, someone has to sell that put. Okay? So say it's a dealer or a market maker. They sell a put. When I buy a put, buying a put is bearish, right? But you sell a put, that's bullish. So what the dealer or market maker has to do then is they have to make their position neutral. They have to hedge. So what they'll go in is they'll sell futures to make their position delta neutral. They're just offsetting their risk. They basically have no risk. So now futures are being sold by market makers and dealers when puts are being bought, right? So that's when it starts. Okay, so that's why the market will drop when this full fear happens. That's why it's dropping. Everyone's buying puts, market makers are selling futures. All right, now the other side of that coin is when this goes back and reverts, like so. See here, when this red dips below the blue line here, look at the SPY above us. It starts to go higher, and when the width of these two spread, that's when hedging is not in the market. Okay, people are less fearful, and the market can then go higher. Okay, so even if I zoom in a little more, you can see recently, look at this bottom, full fear down here, right? Red above the blue, bottom. We come down, we separate, we have width. You get some buying back. Look, another inversion. That's a bottom. Another inversion. This inversion here. Look at the bottom here. And then we came down and they separated. And then look, buying. See how they're separating? Now why are they separating it again, right? Well, what happens is basically that just the opposite happens. Okay? Now once puts expire or people are buying back their puts, the market makers and dealers now can buy back the futures they sold. So now futures get bought by dealers and market makers. So which pushes the market higher. Okay? Now again, this doesn't mean when you invert, you just all out go long. But it means that there's full fear and there is going to be a turn. Okay? So you can see here, this latest move, the width of these separated. No, I'm sorry, that's not the latest move. So here, there wasn't a full inversion here, but you can see here, in this little move, look at what's happening. They're separating again. See how they came close together here? Now the mouth of these two are opening up again, which is hence why we're moving higher. So I just want to point something out. So basically, let's get to the main thing. Okay, red over the blue means full fear. That's full fear. Okay. When you have the red line way below the blue line down here, that's full. That's full complacency. That just means that we're probably going to go lower in the market eventually, and usually we do. We get a sell-off. So red below the blue means that we're at full complacency, and we're probably going to look for a move lower. And that's just how the market works. See, comes back up, comes down, comes back up, comes down. But this really shows you the hedge in the market. It really shows you this is how the market works. This isn't guessing. This is full fear here. complacency here, right? So probably, I hope I didn't confuse a lot of everybody. I just wanted to show that I look at this to see where we're at in the market, where people are hedging or not hedging. So if I were to look at it right now, you know, it's kind of like, the CPI is coming up, and the mouth's widening right now. That's why the market's moving higher. Anything can happen on the drop of a dime. I'm not saying you use this as a day trading indicator. I use it more as a macro look. Hopefully, this didn't confuse too many people. If you have any questions, let me know. It's not hard. It's not. It's just very, very basic. But I know listening to it for the first time could be confusing. Hopefully, it made some sense. Um, I wish I'm gonna take off. Uh, Hope everybody has a good day trading. You know, and give me a comment, give me a like, subscribe. Hopefully, I didn't confuse too many people. And good luck today, everybody.